this one person has taken almost $500 million of delivery of silver in just the last 3 months. Suddenly, there are massive gold inflows happening right now in the United States. You've heard probably that they've proposed auditing Fort Knox and so on. Have you heard that? Okay, so I think that this is actually the bullion banks trying to cover their butts. The Federal Reserve, they have a lien on all of that gold. It was used as collateral. The economic result will be akin to giving oneself a root canal with a shotgun. Effective but fatal. So we have this giant cup and handle that is predicting triple-digit silver. So we're in the low 30s right now, probably somewhere between $150 and $500 an ounce for silver.
Let me just introduce a gentleman who changed the course of my investment career because he woke me up to the ideas that precious metals could be somewhere in my portfolio. And just like you wish you had bought Bitcoin when it was $3, I'm thankful that I bought gold and silver when it was a lot less expensive than it is now. It's not an investment in my mind. It is absolutely insurance. It's a hedge, but it also lets me sleep at night. He's not here to talk about gold and silver, even though he's the best-selling author in the world on gold and silver. He really is driven by paying attention to macroeconomics. So with that, please welcome our good friend, Mr. Mike Maloney.
Okay, so that video that he was testing out, this happened just yesterday. Real quick, what they discovered is that the Treasury general account, there's like, he's going to mention it, 580 different agencies in the United States. Each of them has a checkbook, and they just send an order to the Treasury to pay this bill, and the Treasury does it right away, no questions asked. There is no accountability. There's no payment number. There's nobody that they can call to ask, what was this payment for? Who authorized it? And that makes the federal government not auditable. This is a scary situation, but there is over $500 billion worth of fraud that has been going on, and it's been going on for years. You know, when I first got back into precious metals, I think about 2003 was when I first started downloading the financial statement of the United States every year and going through every page of it and putting tabs on it and highlighting stuff. And it always, David Walker, the Comptroller General of the United States back then, head of the Government Accountability Office, would always start the thing with, he cannot give an opinion because of the material weaknesses in the accounting of the government, especially the military. It's like they just spend and they don't tell you what for. And so this was yesterday. They are changing these rules. And the problem with all of this, you know, the DOGE agency, the Department of Government Efficiency, Elon Musk, they found all of this fraud. So now there's already $500 billion that has been discovered that they are going to cut out. And they're going to save us all, wasting all of this tax money. But the problem is they haven't lifted regulations quick enough on business to grow GDP faster through private business taking up the slack before they cut out all of these payments. And even though it's fraudulent, it goes to somebody that's going to go buy groceries and gasoline or invest in the stock market if they're rich off of the graft that they are taking from us all. So we're going into a recession anyway. And then they're going, you know, the government spends about $6 trillion a year, and they're going to cut that to 5.5 just like that. And that means that GDP has to shrink.
Okay.
And
hold that thought, because I think we have this.
Okay.
We'll try it first. I'll try it here.
And it is alarming how the financial operations and financial management is set up today. There is actually really only one bank account that's used to disperse all monies that go out of the federal government.
Time out. One bank account.
It's a big one.
It's a big one.
It's a big one.
It's a big one. A couple weeks ago, it had $800 billion in it, but it's the Treasury general account. So when you hear, you know, some of my colleagues here, what they're talking about in terms of the fraud, you have to ask, well, why is this allowed to happen at a financial level? Well, it's actually quite simple but alarming. The Treasury, up until now, and thanks to President Trump, we're fixing this. In fact, there's an executive order that he just signed the other day, which is protecting America's bank account, because it really is the taxpayers' money. One, we're changing the culture. The culture is been not a lot of caring and not a lot of commitment to doing what's right relative to financial operations. There's a $500 billion of fraud every year. There's hundreds of billion dollars of improper payments, and we can't pass an audit. The consolidated financial report is produced by Treasury, and we cannot pass it on. We have material weaknesses. What that means is that if I was a public company CFO, I would effectively be removed. I couldn't file financial statements. I couldn't issue securities, which of course we depend on. Can't pass an audit.
Right. The federal government cannot pass an audit. It's impossible. In fact, in order to pass an audit, you need the information necessary to pass an audit. You need to have the payment codes, you need to have the payment explanation, and you need to have a person you can contact to understand why that payment was made. None of those things were mandatory until just recently, just a few weeks ago. In fact, maybe last week?
Yeah, we're serving 580 plus agencies. And up until very recently, effectively they could say make the payment, and Treasury just sent it out as fast as possible. No verification. And so what we're doing is what any household would do. But imagine you're a household, you have a bank account, everyone has an ATM card connected to that account, everyone has a checkbook connected to that account. It's not just your children, it's not just your parents, it's your in-laws, it's your extended family, and they all can go to the account and disperse funds. No questions asked, no justification, no verification.
Okay, so like I said, this $500 billion that they're going to be cutting out of the federal budget all fed into GDP. Somebody was getting that and buying groceries and gasoline with it. And it looks like we are already in a recession at this point. So Luke Groman, a friend of mine, unless Doge follows the correct order of operations, devalue the debt to GDP significantly and quickly via negative real rates, gold revaluation, and etc., then cut costs. So let the economy grow first and then start cutting out all of this. The economic result will be akin to giving oneself a root canal with a shotgun. Fatal, but effective, but fatal. And so what you're going to see is, I think, that there is, everything is a bell curve of probabilities. The best outcome is a mild recession, and then we've got a bad recession, and then we've got total economic Armageddon. It is, anything is possible, but they have to be very careful, and they're not being careful enough. Let's balance the budget by crashing the economy into a recession, and then we can run even higher deficits and as tax revenues collapse. Now, when my first book, Guide to Investing in Gold and Silver, was released in 2008. It was just before the global financial crisis. It predicted a lot of what happened. Everything ended up being actually Ben Bernanke's response to the global financial crisis. I had predicted that there would be massive currency creation, but what he actually did exceeded my wildest nightmares. So in my book, I was going through, I spend a lot of time on the St. Louis Fred. So if you just do a search for that, they've got more than like 500,000 databases, and you can generate your own charts. And I looked at the chart of tax revenues and I went, oh my God, that looks like the stock market. And so I brought up the tax revenues and the Wilshire 5000 index and look at how they follow each other, and notice that the stock market crash of 1989, it was a reverse correlation. There is no correlation until you go back to 1929. That is the last time that tax revenues collapsed with the stock market. And I called this the dangerous fog, F-O-G, the financialization of government. Government revenues rely on the stock market doing well these days. So 1/3 of government spend, one third of GDP is government spending. And so if they cut down on government spending, they're cutting down on GDP. They're getting ready, it seems like, for something big. The FDIC ends disclosing the total assets of banks on the problems banks list, as disclosure might suddenly trigger a disorderly run. So there are some banks right now that are in some pretty bad condition. This is the Atlanta Fed is the white line, and they are predicting a contraction of GDP of 2.8%. So if you get 2 quarters in a row of contraction, that is officially a recession at that point. And this data, this happened in February. So this is their projection. So that's the Federal Reserve projecting that at the same time that they're going to cut out all of this fraud spending. Americans fall behind on car payments. It's up over 6%. Now, do I have a laser here? Yes. Okay. So we have this is the first Gulf War and a recession that happened right after the first Gulf War. And then we go along, and this is the global financial crisis. We're above the peak of the global financial crisis, the crash of 2008. This is all the payroll protection schemes and checks getting sent directly from the Treasury to consumers, and they actually paid down. They became less late on their payments. But defaults like this signal that we're in a weak economic situation. These are people that plan to take a vacation. And this is the global financial crisis. This is the lockdowns, so nobody could really take a vacation. But look at that sudden fall that happened right now. Then we've got privately owned housing units under construction, units in buildings with 5 units or more. Now, I was talking with Derek and Robbie, and they see, and this is very positive for apartment building owners. But if you're single family, right, I know nothing about real estate. You're at a conference with the experts. But I would probably take a look at what I'm doing if you're into single family. You probably don't want to be over leveraged, and you probably want to wait for another year or two. After the global financial crisis of 2008, stock market crashed, and it took 2 years for real estate to bottom, and then you had 2 years to go shopping. So there should be some phenomenal deals out there. I don't know that much about how real estate interacts with the rest of the economy and the best time to go shopping, but Derek and Robbie are saying that it feels like it's 2013 again, or 2012, and that was the bottom in real estate. This is the U.S. trucking index, and so suddenly goods being shipped from here to there is collapsing. This is, if you bought European stocks in 2000, you've finally broken even after 25 years. Congratulations to everyone. We did it. This isn't inflation adjusted. They're actually like 25% down still, and they're going, at least I've broken even. This is U.S. households now have a bigger allocation to stocks than at any time in history. So the households are very invested in the stock market. So this is going to hurt the average investor, the people with IRAs and so on. Whatever happens next is going to be very painful for the average person. And the stock markets, there's only one way that I could find recently to measure the stock market that doesn't show it in the biggest bubble in history, and that was PE ratios. But here we are. This is the sales to the price of the stock. So the sales of the company compared to the price of the stock, and it's at the most expensive in history, and more of the public is invested than at any time in history. I'm sorry if I'm talking fast, but I'm trying to get through a lot here. This is sort of scary. The blue line is the Dow Jones Industrial Average in 2008, and the black line is today. Dow Jones. Talk about echoes of the past. Fund managers are rotating out of U.S. stocks at the fastest pace in history. And this is capital rotation. So this is when measured in gold, They're seeing if gold is outperforming every one of these, every one of these sectors of, Dan, my producer, used to bet me, you're going to make a mistake on that. You're going to go back a frame accidentally. Energy, financials, healthcare, industrials, materials, real estate in the S&P, technology, all of them have flipped into, 2 months ago, there were 2 of them that were not in the red yet. So if we close March, which is the first quarter, and all of them are still, where gold is still outperforming all of them, it confirms capital rotation, where currency is flowing out of speculative high gain investments and flowing toward a safe haven, which causes precious metals to explode. So there's, Jerome, do you see any similarity? This is our friend George Gammon. Swiss National Bank takes rates down to 0.25. Why? The rest of the world is already going into a recession. We're next. And economies, I did a study on this, and it's in my book. They used to be, all the people that, the countries that the U.S. imported from, we would have a recession, and then 6 months to 2 years later, the countries that we buy from would have a recession. And so I had a time graph and these red boxes going down, and the United States at the bottom, and you could see this little delay. And then with every advancement in technology, they became more and more aligned. And then with the global financial crisis and COVID, they are hypersynchronous. They all happen at the same time. So it doesn't really matter if there is a real estate crash in China, or if it's in Australia or somewhere in Europe. It gets transmitted around the globe through all these derivatives very, very quickly. So this is suddenly, there are massive gold inflows happening right now in the United States. You've heard probably that they've proposed auditing Fort Knox and so on. Have you heard that? Okay, so I think that this is actually the bullion banks trying to cover their butts. The Federal Reserve, who actually has title, they have a lien on all of that gold. It was used as collateral to borrow $11.2 billion at 44 2/9 dollars. 2/9 dollars. That's an irrational number because it ends up at 0.2222, and it goes on like that forever. There is no end to it. Leave it to the government to pick something like that. But these massive gold inflows, it seems like the bullion banks are trying to return leased gold so that there is actually gold there when they audit it. And the noise about auditing has sort of dwindled lately because of I think because they're trying to put it off until they've actually got all the gold returned. And this is silver. And what you see is that, there was inflows and outflows, and then suddenly all of this accumulation. This is published repositories, so the commodities exchange vaults, plus mutual funds and ETFs. So all of the transparent gold and silver holdings. This is commodities exchange deliveries, where instead of settling for cash, if they've made a profit, instead of settling for cash, they go, oh, no, I want my gold. I want my silver. And they're taking delivery of it. And what you see here, this is business as usual, and then this is COVID, and everybody thought the world was going to end. And people started taking deliveries, and it went down, and look at where we are today. These are historic times. If you're protected, it's very entertaining to watch all of this. It's worrying, it's scary, but it's nonetheless entertaining. This guy that says, my last delivery, this was $438 million worth of silver. Though he took delivery like 3 months in a row. So this one person has taken almost $500 million of delivery of silver in just the last 3 months. This is something called a cup and handle. I've been watching this bull develop for years, and I reported on this, and then it did a double top here, and then it started pulling back again, and when it turned up, I said, this is making an inverse head and shoulders. if you know anything about trading, that's one of the most reliable patterns. You can take that pattern, flip it upside down, and so normally you see a head and shoulders right side up. This is upside down, and I said that there's going to be a slingshot move coming, and I was saying that way back here. Get ready, there's a slingshot move. So the people that were listening to me bought back here. And then as soon as it was able to break this triple top resistance, bam, we got this huge move. And it is making this measured move from the size of the cup and handle. Well, this is the cup and handle viewed from the entire bull market starting in 2001 to today. So that's the cup and handle and the slingshot move. But in silver, there's a cup and handle inside of a cup and handle. And the big cup and handle is 45 years long. It goes back to 1980. And this is, charting is only right about 60% of the time, and it's wrong 40% of the time. But humans do make decisions in herding patterns. And so when you see a pattern on the chart, there is a probability that it will be fulfilled, whatever it's predicting. And so we have this giant cup and handle that is predicting triple-digit silver. So we're in the low 30s right now, and there are people saying stuff that I've been saying for years. We are destined for triple digits, probably somewhere between $150 and $500 an ounce for silver. And so there you have the national debt and what you will owe. And so that was the first part. Well, I ended up 8 minutes early.
How about a hand for Mike Maloney, ladies and gentlemen?